Shares of Coinbase are down 4% in the pre-market as Bitcoin's lower by about 3%. Let's talk coins and crypto and whether or not we've fully discovered all the skeletons in the closet post FTX. Jim Bianco, president at Bianco Research, with us this morning. Jim, good morning.
Good morning from Lake Tahoe, California.
Yeah, I'm jealous. Seems like a little vacation out west there. I like it. Ski season officially in gear?
Oh yeah, all the runs are open. As long as I'm not on crutches next week, it's going to be a good week.
All right, good luck. Crypto's on crutches right now. Jim, what comes next here?
The continuing contagion. The big story with crypto right now is probably the largest firm, digital currency group, DTG. They own Grayscale. They own the biggest over-the-counter and lender, Genesis. They own Foundry, the largest miner in the United States. And they seem to be in trouble. They've gone radio silent. The market is very worried about them. This is part of the reason why I think crypto coins are trading sideways. You've taken so much lending out of the market. You've taken so much short interest out of the market. It's not a functional market. I think there's sellers, there's shorts that want to be in this market, but they can't really pull it off right now. So we're just going to have to wait and see if all this contagion continues. Do we get liquidation to take the market down, say under 15,000 on Bitcoin? Because it certainly doesn't look like it's going to be speculative fever that's going to take it down at this point. Even if they wanted to, I don't think they can.
Now, in your mind, have we kind of fully processed the ramifications of the FTX collapse? Or is this a market that's been stabilized since our risk-on post-CPI? Because it was like that inflation print hit right at the right moment to buoy optimism.
Yeah, no, I think this is a lot like, first of all, FTX was an echo of the Terra Luna blockchain that failed in May.
Exactly.
That took 6 months to come. The FTX fallout is not going to be 2 weeks. It might take 6 months or a year before we find out the full extent of that fallout. So I think that this is going to keep going, and we're going to have to try and figure out where it is going to go next. But also, after that May thing, the market took a big dive, traded sideways. Then you had 3 Hours Capital and Celsius, and then the market made lower lows. We had a big dive, and now we're trading sideways. We'll see what the extent of the contagion is to whether or not they wind up sinking lower from here.
Jim, in your mind, did this happen just because of alleged fraud, stealing, or the stories about pulling customer funds? Or is this about an assumption that these coins had value and they didn't, and the balance sheet came up basically zero when there had been billions of dollars attached to coins that were minted out of thin air?
Well, yeah, see, I think it's a little bit of both, and it starts with it was fraud and it was misallocation of customer funds at FTX. Now that everybody's trust has been shaken and no one trusts anything, now we realize that we don't trust anything on an asset that has an intrinsic value of zero. And so therefore, that's why this market has been thrown into chaos. It's one thing in the traditional stock market when you've lost trust, like the '08 financial crisis, you could say, yes, but Procter & Gamble still has value. General Motors still has value, even though they went into bankruptcy. But does Bitcoin still have value if you've lost trust in all of the players in that game? That's really where the crisis in crypto is right now.
A trust crisis for a purportedly trust asset. So, Jim, thinking about the broader impact on equities, last week the analyst from Bank of America cut Coinbase expectations, saying that it's not removed from this entirely. Shares are under pressure with Bitcoin this morning, trying to come back a little bit. What do you think the overlap is there? I mean, if this is a crisis of trust, then will Coinbase have issues too if people stop trading because their coins are only going down?
Well, Coinbase already has a problem. Its stock is down 82% this year. It's down more than Bitcoin. It's underperformed it. And, you know, if you want to draw that bigger, where does this fit into the, TradFi world, as they like to call it? Well, Signature Bank and Silvergate Bank, those stocks are down 60, 50% in the last few months. A lot of the VC firms that have now taken big reputational hits because they backed FTX, that might show up in some of the funding for unprofitable technology companies. But that's about it right now. A full-blown contagion in crypto, I don't think you're going to see in the S&P, or you're going to see in interest rates, or you're going to see in some kind of alteration of Fed policy. This is its own problem. And of course, crypto doesn't have a central bank to print money to get them out of this. So that's why I think this is going to be a tough slog for them for the next several months.
There's been various kind of points of concern along the way that were never, maybe not totally resolved, but also not proven to be some of the worst case scenarios, like Tether, questions about what's behind Grayscale. I mean, where do you think there are potential kind of further existential risks?
Well, I think the big one right now is what is called the centralized exchanges. You know, that is the Coinbase is under trouble, Binance, a lot of the South Korean, Hong Kong, Singapore exchanges, even Gemini was starting to be rumored last week. They had to stop their lending program called Gemini Earn because they had it with Genesis, which is part of this DTG world that's having problems. So a lot of people are looking at a lot of the centralized lenders and they're losing trust in them. And coins are moving out of the centralized lenders. Now, some of them are moving into what's called cold storage. Others are just leaving the sector altogether. And like I said, that process won't be over with in a week or two. That process will be a long time in coming. And yeah, while maybe Bitcoin could base, to have all of a sudden trust to be reestablished that everybody wants to rush in, that's going to take time. And that's the one thing that a lot of people don't want to see. They want to see the market go up sooner, but it might take a longer time.
Mm-hmm. Okay. Jim, thinking about how this relates to the broad market, to your point, containment perhaps in some of the very specific crypto-related stocks. But again, as we see equities kind of plateau here, it's like that CPI pop didn't get a lot of follow through. PPI couldn't take us to the next level. But do we have the information now from Federal Reserve speakers that we are going to get a little bit of a step back to 50 bips? What's your thought on the broad market situation right now?
Yeah, it looks like the Fed's now 50 from here on out. It'll be 50 in December. It'll probably be 50 in January. That'll take the funds rate to 5%. I actually think what's happened with the data, if you look at it, yes, CPI came in below expectations for only the third time in the last 20 months. That's how rare that has been recently. And then you saw things like the initial claims number came in a little bit lower in the low 200,000s. Maybe the problem is that the economy is not falling apart. And Jay Powell and company can look at it and go, look, all this rate hiking and all this bellicose language about inflation, and nothing is falling apart. So we could just keep raising rates because we still have 7.7% inflation. And I think that that's almost what's got the market giving pause is, yeah, okay, inflation is peaked. And it's coming down, but we're not really, 7.7 or 6% is not going to get the Fed to stop. And if we keep printing 260,000 jobs and low 200,000s on claims and have a decent retail sales report like we did last week, he's going to keep going 50 every meeting. And that's what I think is giving the market some pause right now.
Okay. And as we speak, crude oil's dropped off. It's selling off hard. There's this other question about how China's reopening is going to factor into the economic situation right now. A lot of people argue that that is going to bring a second inflationary wave that the Fed will have to reckon with. But crude oil and copper seem to be saying something very different. The last week here, both have been very soft. I'm not sure what to make of it because supposedly China's about to kick back into gear. What do you think, Jim?
Yeah, Wall Street is showing their desperation by saying that China is going to reopen. If you haven't been watching, they're setting new all-time case count records today, breaking the record from yesterday. So it's the worst it's ever been, at least in terms of case counts. After crushing their economy, after a communist country that wants control has imposed on their citizens for over a year with zero COVID, they're not going to call it off now. Maybe in the spring, maybe in 6 months when that case count goes back down, well under 1,000 or something, they could call it off. But it isn't going to happen now. And I think that's what you're seeing with copper and what you're seeing with crude oil. I agree. You reopen that economy, you should get a spurt in commodities, especially energy. But I think what the realization is, it's just, to use a crypto term, it's a bunch of Wall Street degens that want it opened, but not the communist country, not the communist government that's going to open it. So I think we're starting to see the realization that they can't with these kind of cases, and they're certainly not going to capitulate and order 1 million doses of Moderna and Pfizer vaccines after telling their population for 2 years that the West is evil and that the West doesn't care, and then say, okay, now we give up, take the West's vaccine. That's just not the way it's been propagandized there. And so therefore, I don't think you're going to see any kind of reopening. Check again in the spring.
Boy, it sure seems like crude oil agrees with you right now. Down big this morning, definitely the biggest mover. Jim, great stuff. Thanks for hitting all the big ones with us.
Thank you.
All right, appreciate it. Enjoy Lake Tahoe. Jim Bianco, president at Bianco Research. Coming up, let's talk some stocks that are